So as far as the strategy goes, these are things that I've covered thus far too, is we're selective with our sectors, really focused on those sectors we think will do well. One thing I didn't touch on earlier is if you look in the core equity portfolio, we're underweight technology right now because I think technology has gotten overvalued. A lot of these stocks seem to have gotten ahead of themselves. It'll be an interesting week. All the big tech bellwethers report earnings this week. Apple, Microsoft, Amazon, Google. So it'll be interesting to see where we are at the end of the week. Those are all great companies that seem to consistently report higher earnings, but then you get into the second tier where it's a little more questionable. There's some ups and downs, hits and misses. And so that's kind of why we're a little underweight on technology right now, but that probably won't last. You know, we'll see the market kind of come into its own and level out a bit, I think. Also, you know, inflation busters. There's alternative investments outside of fixed income. These last two go hand in hand. You know, look at things that aren't fixed income, that aren't bonds, that are going to get you better returns than inflation. You know, real estate historically has been one of those areas. The materials producers, you know, mining companies, for example, are another one. So there's some things there. And then lastly here, this is just more for fun. I like charts and graphs. This is one I came across. There's this How Much website for any of you that like to hop on the internet and just look at numbers and charts. You could spend hours on this particular one. This goes 20 years up through December 2018, so it's a little dated now. But I thought this was especially important as it shows, you know, what prices have done. So apparel, household furnishings, new cars have really stayed very steady, or did throughout those 20 years. And the CPI, which is the measure of inflation, has gone up some, but there's a lot of things that have gone up more. And basically what it is healthcare, you know, then college tuition. For most of you, healthcare is a very large cost. It's gone up considerably more than what is measured by the CPI. And average hourly earnings. So I don't mean to cause concern. It's something to be aware of, and that's why you have to be especially concerned with your investments outpacing inflation and maintaining your purchasing power. On the flip side, I thought it was interesting too, and this only makes sense with the advances in technology, how television, toys, computer software have come down dramatically in price. TVs cost, and I think what they're looking at here is if you go back 20 years, they have the big tube TVs, which admittedly, I think I got rid of my last one only 3 or 4 years ago. Those are selling for 99% less than they were in 2018. No, they're not. That's what I hear is if they break, it seems like a waste. But
it is.
Yeah, it doesn't make. So I went through this very quickly. We'll see if there's any questions. I did want to point out too, if each of you, it's important. You know, everybody's individual circumstances are different. You know, if you haven't had a review with your advisor in a while, it's probably a good time to do that. Kind of a mid-year checkup. Stop on your way out. We can schedule that. Give us a call, email. I'm glad to talk if anybody wants to talk investments as well at any time. So.